I am seeing on silver versus commodities is that we have broken decisively through 200-week moving average. We broke through it once here, settled back down to test again, and now we've broken through it again. So it looks like we're decisively above the 200-week moving average. This is a very rare signal as goes silver bull markets relative to other commodities. It means that the value of silver is rising relative to other commodities because its moneyness is starting to wake up again. The logical way that works is that other commodities do not have monetary demand. Silver has monetary demand, and everyone needs money. Therefore, everyone needs silver as the moneyness of silver is recognized. So this bull market should continue higher and higher as the moneyness of silver becomes recognized as the dollar fails, because as the dollar fails, people with currency are going to realize that they have nothing and they're going to need a money, and there is no spontaneous agreement on money. It has to go back to the past, and the past is gold and silver is the public and gold is the banks.
Silver's more impressive gains came as the metal broke out of a technical continuation pattern, and with the dollar falling against a basket of foreign currencies thanks to weakness in U.S. data. This raised investor expectations about a September rate cut by the U.S. Federal Reserve. Concerns about the French elections on Sunday also contributed to boosting precious metals' appeal last week. Rafi Farber is an insightful financial analyst known for his perspectives on precious metals and global economic trends. Based on fundamentals, Farber states that the recent break of the 200-week moving average in silver indicates a strong bullish trend. Silver prices have surged this year, driven by strong demand outpacing, prompting speculation about future price movements with 6 months remaining. According to the World Silver Survey, 2024 is the 5th year with a silver shortage. In 2023, silver demand was higher than supply, leading to a market deficit of over 142 million ounces. Because of increasing industrial demand, this shortfall is expected to nearly double to 265 million ounces by the end of 2024. Regarding the current market situation, Farber notes that gold and silver are reaching unprecedented highs relative to platinum. He highlights the historically low 32-to-1 silver-to-platinum ratio, a rarity last seen in 1980, suggesting potential for advantageous exchanges. Meanwhile, Bullion Vault reported significant increases in trading volumes as silver surged by 57%, coinciding with its highest prices in 11 to 12 years. This dual trend underscores a robust market interest in precious metals amid their notable price performances. From a technical standpoint, Farber also notes that silver premiums are currently very low, making it an advantageous time to buy physical silver or gold. He believes demand is soft now, but predicts it will surge following the next banking crisis. Now, we present the clips of Rafi Farber's insights from his recent video. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Silver versus commodities continuing a healthy bull market. So we talked about how I don't trust the dollar rally so much, or the current one since June 27th, very minor short-term rally here. But what I am seeing on silver versus commodities is that we have broken decisively through the 200-week moving average. We broke through it once here, and we settled back down to test again, and now we've broken through it again. So it looks like we're decisively above the 200-week moving average. This is a very rare signal as goes silver bull markets relative to other commodities. It means that the value of silver is rising relative to other commodities because its moneyness is starting to wake up again. And the logical way that works is that other commodities do not have monetary demand. Silver has monetary demand, and everyone needs money. Therefore, everyone needs silver as the moneyness of silver is recognized. So this bull market should continue higher and higher as the moneyness of silver becomes recognized as the dollar fails, because as the dollar fails, people with currency are going to realize that they have nothing and they're going to need a money, and there is no spontaneous agreement on money. It has to go back to the past, and the past is gold and silver is the public and gold is the banks. That's how it is. That is monetary reality, and there's no arguing it, really. I mean, you could, it just doesn't make any sense. So anyway, we had the break of the 200-week moving average in 2008, which led to a huge rally up to the $50 top. This top relative to commodities was not as high, but this was the $50 top around here in May 2011. We had another break of the 200-week moving average around here in 2015 at the end of the gold bear market. That signaled the end of the bear market, that break of the 200-week moving average. Another break of the 200-week moving average relative to other commodities right here prior to the all-time record high of silver relative to other commodities at about 0.22, 0.23 or something like that. And we have another break over here. This is the fourth break since the 2008 financial crisis. These are very rare signals. Pay attention to it now, because even though we might be whipsawing relative to dollars, I think we are on the next leg up relative to other commodities. Don't remember if I talked about this previously 2 or 3 weeks ago, but silver is at an all-time high relative to platinum. This is actually the platinum to silver ratio, how many ounces of silver it takes to buy 1 ounce of platinum. Now, I don't recommend stacking platinum. I never did. But if you've always wanted some platinum just to diversify, just to have it because it is a really cool metal to own, now would be the time to exchange some silver if you have any extra or too much in your safe, or it's too heavy or whatever, you want to free up some room. Then you could take some of your silver and buy some platinum at a very good deal right now. It's about 32 ounces. See here, the ratio is 32.07. That's what it is today as well. So it takes 32 ounces of silver to buy 1 ounce of platinum, and we've only gone below that one time in history, and that was in 1980 when we were about 18, close to 15 to 1. And there was that 15 to 1 ratio again in Endgame. I guess it also goes that way in platinum as well. But yeah, you're not going to get much better prices than this, I don't think, in terms of platinum for silver if you want to do some trading. Gold at all-time high versus platinum. One more thing about platinum, you can see that if you want to trade some of your gold, I am not trading gold for platinum. I don't have that much gold and I want to keep it. But if you have a little bit more than you want and you want some platinum instead, it's a good time to trade some gold for platinum if that's what you want. Silver premiums are dead on arrival. We're at 7.96% premium on junk silver relative to the spot price. This is almost prior to silver squeeze. Silver squeeze is right here where I am circling. In the beginning of 2021, there was this big jump on silver squeeze, and then we moved up from there to about 50% right before 2023, about October, November 2022. And we've been going down ever since. Demand is kind of soft right now, and I see that on my channel as well. So this is going to wake up pretty soon, I think, after the next banking crisis. It's going to wake up very powerfully, and we'll see what happens then. But if you want to get a good deal on physical silver or physical gold right now, now's the time to buy because premiums are very, very low.
Based on recent market trends, Rafi Farber expresses caution about the significant rise in open interest in gold since late June, which could signal upcoming volatility. He believes traders should stay cautious, though current low premiums make it a good time to buy physical metals. Meanwhile, the CME COMEX, an exchange where futures are traded for gold, silver, and other commodities, has seen big moves in silver and gold. This means more people are taking delivery of physical metal. According to Shift Gold, May showed open interest in gold at a well above trend level. 30,000 contracts stood for delivery in June, the largest volume since August 2022. Consequently, Farber finds the Saudi debt threat to the G7 over Russian assets intriguing. He suggests that similar strategic negotiations might occur between the Bank of Japan and the Fed, speculating that Fed rate cuts could stabilize the yen. This highlights potential financial maneuvers and their implications for global currency stability. Let's get back to the interview.
So anyway, we have this open interest chart. You can see here that open interest has really climbed since the June 27th bottom in gold. And of course, silver follows gold here. I'm using the gold chart as a proxy. So June 27th, we had a low of about $2,300. And now we're at close to $2,400. I think $2,380 last time I looked, or wherever it is now when you're watching this. I don't know. So we had a low here of about 440,000 contracts on that low in the gold market, and now we're at 530,000. So that's 90,000 contracts. Not much of a price move, but a big move in open interest. That's making me a little bit nervous. It's more that I'm just being cautious here. I don't quite trust this rally in dollar terms, at least. I'll show you the rally in commodity terms, which is much more promising. I still think there could be some whipsawing action in the days, maybe a week or two ahead. Just stay cautious here and expect it and play nice, basically. So that doesn't mean that this is a fake rally. It could be real, but because you look here in March, and we did have a major rally in price here and a huge rally in open interest. And then what we really want to see is this, though, right? This is price moving up from about 21.50, it looks like, to a high of 24.50. So we had about a $300 move here, and open interest didn't really do much at all. That keeps the bullish fuel alive, as long as you don't keep rising and rising in open interest. You saw, remember when open interest hit an all-time record of 850,000 contracts. That was in the eve of the March smash, which took a lot of people out of the game, unfortunately. So for that reason, just stay cautious here. If you're trading, especially if you're stacking, it doesn't really matter that much because premiums are very low right now. This is an interesting story, and I wanted to transpose it on something that might be happening in the currency markets. I don't have any direct evidence of this, but I don't see why it wouldn't be happening, especially if the Bank of Japan would be panicking. So we have, this is from Bloomberg. The title is Saudis warned G7 over Russia seizures with debt sale threat. The Saudis did not want Europe to seize Russian assets from its central bank, anything that was stored in other European central banks like the European Central Bank. Touche. So apparently this made the mainstream media. Read the first paragraph here. Saudi Arabia privately hinted earlier this year that it might sell some European debt holdings if the group of seven decided to seize almost $200 billion of Russia's frozen assets. People familiar with the matter said. So Saudi Arabia is playing both sides here. It's on the US's side and it's on Russia's side. And let's see what move they make when the US eventually falls monetarily. It's going to be an interesting story in Saudi Arabia. And why doesn't this guy, Zelensky is his name, why doesn't he ever wear anything respectable? He looks like a bum or like a street bum with the cargo pants, and I don't know what the hell kind of shirt he's wearing. He always looks like an idiot, in my opinion. This guy's much better dressed. That's a nice keffiyeh there. Look at that. But anyway, it says at the bottom here, the Saudis specifically mentioned debt issued by the French Treasury. They threatened the French to sell their debt. Wow. So my point here is to speculate that if this goes on behind closed doors, and that's how they stop Europe from seizing Russian assets, basically, what is going on behind closed doors with the Bank of Japan and the Fed? It could very well be that that if the yen starts to really collapse, it could be that the Fed will lower interest rates in order to save the yen, because otherwise the Bank of Japan is going to have to sell a lot of treasuries, and I don't think the Fed wants that. So we could be having these same threatening conversations between those two central banks. I don't know if this is happening, but if I were the Bank of Japan and I had a collapsing currency and the only thing I could do was sell US debt or watch my currency collapse, I would let the Fed know and tell them to lower interest rates so they would erase the spread between the dollar and the yen and save my currency.
The recent breakout suggests that silver could rise towards $35 in the coming weeks, possibly even higher, if and when it climbs through the recent consolidation range. So, on the long-term charts, the bullish silver forecast is even more relevant. How do you perceive the role of precious metals in your investment strategy amidst fluctuating global economic conditions? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.